Hello, everybody. So today, due to popular request in the comments, I've decided to cover Gen Z FinTechs. What are the FinTechs that are favorites of the Gen Z? Those tech firms that are in finance and that might become the main players maybe 5, maybe 10 years from now when Gen Z hit their peak earning years. And so if you look at the spreadsheet, right, I have 6 names that I think fit well in there. SOFI, Affirm, Nubank, Robinhood, Coinbase, and Square. And these are definitely the innovative hyper-growth firms in that sector. You can see the growth numbers being put out as much higher than say your typical bank, much higher than even top companies like a Visa. These numbers are very well. So, which company out of the 6 do I own? Well, I own 4 of them. I own Nubank. Nubank is my largest position. Of note, it was not my largest buy, it just went up quite a bit. I remember buying Nubank in the 5 to 6 range, but some around the $10 range. But Nubank today is at about $15. So that's why it's the first position. Then SOFI. So SOFI, it hasn't done much in what, 2 years, almost 3 years now. But these things are like coiled springs. Eventually, SOFI will pop, and what is the fair value of SOFI? Is it $11 or $12, something like that? Probably right now. But that stock, in my view, will go much higher. So we'll discuss SOFI briefly in a second. Then we have Coinbase. Coinbase, same. The stock it's highly correlated to cryptocurrency, and so I have a fair position in Coinbase, but it's not a stock that I really follow. It's more a call option on everything crypto because Coinbase is just about invested in everything in crypto. And the last one is Robinhood. So Robinhood is kind of a 0 to 1 innovator that I consider in the space. Perhaps Robinhood is the most innovative company out of the bunch here, in my view, perhaps along with Coin. But Robinhood has a much more predictable business model. The stock was cheap due to the whole GameStop debacle, but I think this stock still has a lot to go. So these are the 4 stocks that I own. Unfortunately, I don't own Affirm. Unfortunately, I don't own Square anymore. I used to. But again, Nubank is my largest position in there. So let me just go through the spreadsheet and we're going to talk a little bit about the valuation. Which one do I find the cheapest out of the 6? Like if I were personally, no investment advice, just me. But if I were to only buy one, and I have added a month ago to this one, something like that, just a tad, not that much, because the stock ran up a little bit. But it's Robinhood. Robinhood to me, it seems kind of an all-around winner with their revenue growth, with the stock market, the way it's going to do, I think, in the next few years. With crypto, the way it's going to do in the next few years, I wouldn't be surprised if revenue growth spiked back up, above 30%, maybe 40%. We could get back to this level because, of course, we're going to get in an environment with looser monetary policy, more investing going on. So that growth rate might actually be low right now compared to what it's going to be. The gross margin is excellent at 86%. They are EBITDA margin profitable, which is what I care about the most. They're not going to go bankrupt anytime soon. Price to forward revenue is cheap at a 4. Forward gross profit, price to forward gross profit, EV to forward gross profit is 4.8. So that's cheap too. And of course, on my metric on enterprise value over revenue growth, over gross profit over revenue growth. So how much am I paying for that growth? Is that growth cheap? You can see it is the second cheapest. It is second cheapest only to SOFI. But the main distinction with SOFI here, of course, is that they have a nice EBITDA margin. They essentially achieve the rule of 40. And SOFI, in my view, they've done a few strategic mistakes that Robinhood has done its fair share of strategic mistakes too. But let's just say for Robinhood, it was like 4 years back. For SOFI, it was exiting crypto, and I still have a hard time with that decision. But anyways, the best gross margin of the bunch. And as far as a qualitative commentary for Robinhood is, let's face it, the 3% IRA match That's a stunning offer. I moved most of my retirement assets. I moved to Robinhood to get that 3% match. It's amazing when you get 3% on the face value of your retirement account just for transferring and staying with them. In the case of an IRA, 5 years. In the case of a brokerage account, 2 years. They have 3% cash back on everything. Credit card. This is now the only credit card I use. I was an early adopter of this credit card. When you get 3% cash back on everything, it's great. All of a sudden, you don't have to figure out which credit card you want to use. I think they're just gonna take over a large chunk of the market share of that 3% credit card. They're a 0 to 1 innovator. They have a history of innovation at Robinhood. They're the ones who pioneered the zero-fee trade. Now they're the ones who are pioneering the non-employer match, right? The match without an employer, which is really in line with Gen Z and how Gen Z work, how Gen Z have, gig economy type work and not necessarily formal employers. 24-hour market, granted, the 24-hour market is still not available whenever there's a big crash. Remember the Japan carry trade, 24-hour market was not working during the Japan carry trade. Kind of made me mad, makes a lot of people mad, but eventually I think they'll get it right. You can lend your shares. In my view, Robinhood is shaping up to be Schwab's Gen Z, and that's based on over and over observation of them doing well. It's not just a one-time thing, right? They're just not a one-trick pony with just the zero-fee trades. They've kept doing more. So to me right now, out of the 6, that's the most compelling. That's the one I would add to right now, and I added recently to it. The second stock, and I'm still very bullish on SOFI. People in the comment section ask me sometimes, am I still bullish? Yes, I'm still bullish on SOFI. I like the stock better at $6 than at almost $8 now. Keep in mind when a stock trades in the single digit, 8 and 6 is actually a pretty big difference. But I'm still very bullish. I think they will benefit from the rates going down. They'll have a lot of refinancing, a lot of new opportunities to lend. When rates are high, people are less likely to borrow. They're more likely to delay purchases and wait until rates are low. So I think they will be benefiting more from rates going down because they're a company that doesn't have a very large portfolio of established bank loans, right? It's not like an established bank who benefits because they have all of this outstanding money that they can earn on. No, it's a new bank, and so new banks, in my view, from what I see, they benefit more when interest rates go down. If you're a newer bank and you're trying to take over market share, they're picky. I like that they are very picky. They only issue the loans to the best of the best, to the most affluent millennials. Credit scores are very high to whoever they lend. Very high credit scores they tend to have. Those Gen Z, those millennials tend to have high income, in the high 150s, 160s, and again, my position's been stable with them. I increased it barely, just a little bit here and there, but barely, and I haven't increased it very much ever since they've existed. They've exited crypto. I know not everybody agrees with me. I know it's not their fault, but some companies decided to do lawsuits, and some companies decided to fight the regulator when the regulator said you can't have crypto. SOFI didn't do that. SOFI agreed to take out the crypto, and they took out the crypto offering at the worst moment, right before crypto, in the case of Bitcoin, did a 3.5x. That's when they took it out. I do agree that the Bitcoin ETFs kind of mitigate that, but the fact that they exited crypto, which if you look at any survey, cryptocurrency is Gen Z's favorite asset. It's Gen Z's favorite asset. The fact that they exited that still left a sour taste in my mind. I hope they bring it back. I really do, because what is a one-stop shop platform that doesn't have crypto? Can you have a one-stop shop platform that doesn't have the most important asset class to that generation? My answer is simple, is you can't. You can't have that. But lastly, Galileo, their growth seems to be coming back, which is good. A lot of concerns about the growth of Galileo in the past. Now the growth seems to be coming back. Overall, it's sleep well at night for me, this stock. Not adding, not selling, just waiting for the 10-year story to unfold, waiting for this stock to be a quote-unquote top 10 financial institutions by 2030 or 2035, and I'm fine owning it. Let me move on to Nubank. So Nubank, to me, is the ultimate swan stock, the ultimate sleep well at night stock, and not only because I'm sitting on gains. A lot of people who bought Nubank are now sitting on gains. This is a stock that was very unfairly sold. Nubank, it's a banking the underbanked story for Latin America, but it's also a banking the youth story of Latin America, and perhaps increasingly more and more banking people who are just leaving their old legacy pervasive banks, especially in Brazil, where banks are very powerful. They're just leaving these banks and going to the newer, with better marketing bank that has a good app, an app that is fast, that has a credit card that is very popular in Brazil. Credit cards are very popular in Brazil. Brazilians love perks, and so that's one of the reasons why Nubank is doing well in Brazil. That's one of the reasons stock I didn't put in there, but one of the reasons why StoneCo is doing well in Brazil also is because Brazilians love to use and pay with credit cards, even if they have Pix over there and the direct central bank instituted payment system. Even though they have that, people still keep using credit cards because that's part of the culture over there in Brazil, and more part of the culture in Latin America. Important to note that Nubank has one of the lowest acquisition costs for customers of any bank. I think it's in the 2 digits. Not $100, right? A little more than $10. And they advertise it every quarter. It changes and they advertise it, but it's a very low. It's incredibly low cost of acquisition of new customers, and of course that helps promote that amazing revenue growth of 45% revenue growth predicted over the next 12 months. They have the highest net promoter score of any bank anywhere. Very high net promoter score. Net promoter score is how likely are you to recommend this to a friend? How likely are you? Well, people who use Nubank are very likely to recommend to their friends. That leads them to the best rule of 40, with a rule of 40 of 76, 31% EBITDA margin for plus 45% revenue growth. That's a 76 rule of 40. So that's outstanding. You're getting up there with, like, say, other stocks in other videos I cover, like Transmedics. You're getting up there. That's very high. There's much growth left throughout Latin America. I think for them, Mexico is a major opportunity. And commentary of people who follow this stock is their possible entry into the U.S. Spanish-speaking community, and that could be huge someday. If they ever entered the U.S., you would obviously have a affluent customer to cater to, and that could be a possibility for them. Now, moving on to another stock that I've covered in the past on the channel. I don't own it, unfortunately. I probably should have, especially when this stock was being battered about 2 years ago. It's Affirm. So Affirm is the pioneer in pay in 4, pay in 6, pay in 8, and now many companies compete with Affirm, right? You have Klarna, you have Afterpay, but Affirm, make no mistake, is still the leader in this space. They have a way to collateralize loans that is really at the individual purchase level. And if you ever listen to a conference call for this company or to Max Levchin, he insists that he's built a very different infrastructure for Affirm and how they issue loan. I think it's also, on this channel, leadership, oftentimes it's second place in my assessment of companies, but it's worth noting that Max Levchin was a PayPal mafia member, right, quote unquote, that famous Forbes article from the mid-2000s about how all of the founders of PayPal, including Elon Musk, Peter Thiel, they ended up going on and founding great companies. So if you own this one, you'd be betting on one of the PayPal initial members. And their positioning in the marketplace is they are the disruptor of credit cards. Gen Z have an aversion to credit cards. They can't stand them, but they much prefer pay in 4, pay in 8, pay in 6. And, it's very popular. This app is very popular in a lot of light spending situation, like clothing stores, for example. Shopping, like any sort of, jewelry shopping, electronics shopping. It's very popular for that, and a lot of Gen Z love it very much. They love that it's clear, it's transparent. It's expensive, right? It's more expensive than playing the game of 0% credit cards. It's more expensive, but it is also more transparent, and it fits right well into the 21st century way of doing business. Not for me to judge. Gen Z loves it. I don't own it. I don't think I'm going to own it because the stock is up 100%. The market is just having a hard time finding how to value this one. Moving on to Coinbase. So Coinbase, I own. Coinbase, the way I look at Coinbase is kind of a stock option on anything crypto. It's a cyclical stock. It follows a Bitcoin cycle. Every 4 years you have a season, a winter season and a summer season for Bitcoin, and it kind of follows that Bitcoin cycle because they make a lot of money on their fees. But the story of Coinbase is that of on-ramping from the fiat traditional banking system for TradFi, as they call it, to decentralized finance, to new forms of finance, to really the main asset class that is loved by Gen Z by a long shot, which is crypto. And if we enter a crypto market, that will generate a lot of fees for a company like Coinbase. Also worth noting that they own half of a stable coin, which you may know of, which is USDC, which was one of the most compliant, most leading stable coins out there. And of course, when they issue USDC, who earns that money on those bonds, right? It's Coinbase who earns that. They also earn a lot of staking rewards. They run a lot of staking pools. They have a major VC arm. They're invested in all things crypto. So the way I view this stock is kind of a stock option, right? An option on the future of crypto, in addition to having a fairly compelling valuation. If you look at, say, the rule of 40, it's a 52. The gross margin is excellent. The EBITDA margin is excellent. The revenue growth, I think, will spike up like Robinhood on this one. It will spike up as crypto becomes more prevalent in 25, coinciding with the summer season of crypto. Downside, it's a little expensive. You're paying up a little bit for that growth, right? It's almost an 8 on a price to sell. It's a little expensive of a stock, just like a Nubank, right? Just like a Nubank. Obvious stories become more and more expensive. Nonetheless, I like Coinbase. I still like Coinbase, not a core position, but a position for me. And the last stock I will cover briefly on this channel is Square. So Square is the leading payment system, payment company for what I would call the U.S. micro business, right? The micro businesses in the U.S., the small shop at the farmer's market, the small booth at the mall. That's what Square enables with their Square payment app. And that's a lesser part of the business. The bigger part of the business, of course, today for them is the Cash App. Cash App is leader for peer-to-peer payments. It's replacing cash in a lot of situations. A lot of people use Cash App just to pay the landscaper, to pay, the pool guy, whatever service you want to use from a pro. A lot of people just use Cash App instead of using actual cash. And so they earn money on fees, not on the Cash App itself, but on fees for, say, people who want to have the deposit back at their bank quicker. And they earn money, of course, on their swipe fees, because they have a cash credit card, which is very popular. You can custom the debit card, not a credit card. It's a debit card. You can customize it. A lot of Gen Z like that very much. They are the leader, of course, not the leader, but one of the main on-ramps for purchasing Bitcoin. A lot of younger people buy Bitcoin on Square. They have a stock division that they're launching. Overall, it's a very innovative company. They are kind of a lesser SOFI that still has crypto, is the way I would describe it. And they also have a payment network and a payment platform in the form of a Cash App. And so as a result of that, the company is solid, the company is doing well, but it's also the most mature of the bunch. And so they grow at 16%. Which, if you know me and if you know the channel, is not enough to get me excited. They grow too slow, and the rule of 40 is just not there at 18. So even though that growth, that 16%, each percent point of growth in the future is pretty cheap, I'm not interested in that stock for that reason. I think there's more exciting opportunities elsewhere. But anyways, this is an overview of the Gen Z FinTechs. This was no financial advice, no investment advice. This is just entertainment. Please like, please subscribe. Thank you so much for watching, and I will see you in the next video.